afternoon. How are we all doing? How's everybody doing? Aussie New Zealand has hit its weekly range, everyone. It's there. Done it. Weekly range hit Wednesday. Now it's got to come down. It's the rules. When it hits its weekly range, the rules are it has to come down. That's the rules. Will it ever stop? This thing's on a utter mission. Look at it. Boing. Not good. Anyway, so yeah, got stopped out on that aggressive drawdown control position from this morning, funnily enough. Getting ready to get into another one at some point. So I'm trailing up at the moment underneath the 15-minute opening, 15-minute opening range, 15-minute reversal alert. Just waiting for any kind of weakness in this thing. It's just nuts. So yeah, trading in aggressive position. Won't stop. Will come down, but at the moment doesn't want to. Like an annoying child. How are you doing? Afternoon, Steve. Loving the way you set out the handbook. Yep, cool handbooks in the Telegram group. I will put it on the website somewhere as well. So go and read the handbook. I called it a handbook. I didn't know what to call it, to be honest. It's just basically a how to absorb content book, really. So yeah, hopefully that helps. Afternoon, Amy, Bellino, Gulam, Fletch, XR Update.news, Burke, Tom, how are we all doing? Brian, Virginia, Diamond. You need to draw a weight on the chart. I forgot all about my weights, yeah. I haven't done those for a while. Going to need 100 tons on this one, aren't we? Stop. Morning, EMAC. So yeah, we'll leave that there. So this afternoon, we have at 3 o'clock the Bank of Canada rate 4.5 forecast. Let's hope they just drop it to 4.25 or something, shall we? So yeah, big news this afternoon in half an hour. The market's going to be really unpredictable, I think, at the open. We might get a lot of whipsawing. I am going to trade the open. I'm going to do it on my futures account. I was thinking about not doing it, but I think what I'm going to do is I'm just going to trade the NASDAQ and see how we get on, basically. So be aware of, obviously, of that news at 3 o'clock. Going to be a big move. So today, let me just get rid of that weight. Let me just pop that back there a minute, just so it can remember it's there. Yeah. Stop. So we may well get a bit of whipsawing today, which won't be bad because it means I can test the functionality of the EA. I've recoded the new version of the opening range breakout EA again this morning because I discovered not a bug, but something I hadn't anticipated with logic. So the DAX, remember the DAX this morning, we had that crazy volatility go in there, which was just a massive whipsaw this morning. So we went 3.5 grand down, traded that back to 800 loss, so 0.8%, which is fine. So DAX, we made that loss there. We had a inside bar breakout short, which banked that. We had an inside bar breakout short, which lost. Then we had another inside bar breakout down here, which went 1.5 and a stop out there. That was 5R. It would have hit that, but we just got taken out on a trailer on it. So if I'd have let it run, we'd be back into positive territory. But I'm quite happy we're not in positive territory because I really want it to trade this afternoon properly. So I'm kind of hoping it's a loss. So up to you if you want to trade it. But I'm hoping it goes wrong because I need to test the functionality. So just be careful on the open. Maybe don't go in full whack, because I don't think they're going to want to move very far at the open. We might, might be totally wrong. It might go absolutely mental. We're sitting up at the 1 week high on the DAX, on the S&P as well. So ADRs so far this morning, Aussie dollar CAD, that has rallied up to ADR and stopped. You've had your 5 minute reverse. Oh no, you haven't had a reverse alert yet. I thought there was one. I don't know, because that's the candle. Okay. So yeah, we haven't had one yet. I thought there was one in there, but there's not. So yeah, we're just sitting up at ADR on that. Anything you're in CAD that you've got anything bankable, think about maybe banking it. So if you've got any profit, bear in mind this Canadian dollar move. If it goes against you, everything you've got in profit on the CAD is going to go out of profit into drawdown. Anything you've got in profit, if you bank it now, it's in your P&L. If it goes your way, the stuff that you've banked, you won't make as much money on. But the stuff that is in drawdown on the Canadian dollar will all go your way. And you can bank that. So it's a win-win situation. You let it all go into drawdown and let it turn from profit to loss, you can't have it back. Then you've got to deal with the drawdown. And we don't know what's going to happen. Anticipating a 4.5, we don't know. We anticipated a 385 on the Aussie. They gave us a 4.1. So we'll have to wait and see. News-wise this morning, we've had the Canadian trade balance come out and the US trade balance, negative, always is. Goldman now expects RBA to hike by another 0.25% in July, August and September, bringing the terminal rate to 4.85, bullish Oz. So that is only 0.25% and they are behind. So although it is bullish Australian dollar, they're way behind. So it's kind of playing catch up. So I'm still not 100% sure the market's going to be that impressed, but we will see. So that's why we've had a bit more of a rally today. We had a bit of a bullish news. So Aussie dollar CAD, we've had the extension. Pound yen, we've also had hitting ADR today. So that one's had a nice rally. So we dropped down 87. ADR on this is 123. And from that double bottom bounce from yesterday's low, we pushed straight up to ADR parabolic. So if you want to drop down and take a reversal on this, this is just about to give you an entry. That's quite a nice, big, strong move and quite possibly going to get a pullback. Yeah, so up to you what your yen exposure is. And Aussie New Zealand, obviously, as we know, has just hit weekly. So Monday is there. That is your weekly range hit already. However, this candle is a big load of rubbish. So I would actually say that is the low of the week. So you're not far off it, though. Yeah, this is normally what we would do in a week. We've done it by Wednesday. Right. So I am going to trade the NAS. Let me just get the charts open so we can see. We've got 5 seconds to go. Looks like it wants to go short already. Okay. Trades are all in. Short on the Dow. Short on the S&P. NASDAQ's the only one not going. The one I'm trading, only one that hasn't bothered. Typical. Okay. Long on the NASDAQ. We've got a long on the NAS. Okay, so bit of divergence here. Short Dow, short S&P. So S&P stopped out, NASDAQ's gone long. Okay, we just closed out. Something's gone wrong on the S&P. That in a minute. Sorry, just holding this trade. That. $900. Job done. Right. So TP hit on the NASDAQ. Dow is still short. Don't know what happened to the S&P, but it whipsawed. Let's have a quick look. So it went short, stopped out. Buy stops deleted. Because I've changed that logic. Right. Okay, I think I know what I've done there. Okay. Yeah, so that's closed. That's closed that out because that's closed as well. Okay, I know what I've done. I've broke it. I broke it. Dow's hit TP. So TP on the Dow, TP on the NASDAQ, profitable runner and a profitable runner. So guaranteed a profit this afternoon again. So whatever happens, we're going profitable, and that's the end of the session. Cool. There we go. Easy money. Easy money. Right. We'll just watch these for the opening range breakout as well for the 5 minute if you're going to take it. But I would probably say if you weren't on the pre-market today, the 5 minute ORB is going to be quite tricky because we've got 25 minutes to go until the news. Unlikely they're going to start a big run, a trend with the Canadian dollar news. More likely they're going to pull back and sit inside a range waiting. So this 5 minute ORB you're seeing on the NASDAQ, once this is in, even if it breaks that high, I suspect we might well just do something like that and hold it until the Canadian dollar rates out. So just be careful if you're taking the 5 minute ORB. The pre-market was the one today. Let's go, NASDAQ. I shut it again early. The only reason I shut that early on that account was because I'd already made $500 this morning. So I'm sitting on $1,270 profit. So ordinarily, I probably would have let that run, but I banked a load off the DAX this morning. So getting greedy, getting bills paid. It's just better pull back and stop out. So your Dow has stopped out on the trailer, 146. NASDAQ stopped out on the trailer, $1,200. So net $1,100 on the day. That's it, done. We won't take any more trades now because we're profit. So that's the day finished. So we'll just wait for these to go in. On the Dow, there's your 15 minute pre-market as well. That was 1 hour return, not 1.5. But so that's your opening range. So obviously, as you can see, they've just got a massive batch in and pulling back basically within the range. So I suspect we will just whipsaw now for the rest of the day. Steve, ORB V1 paid the rent. Excellent. Good job. Escaping gravity. A wrecking ball. Hell, it's been building a damn high rise. Yeah, this thing needs a bomb dropped on its head. Stop. So I'm not. Something I didn't cover this morning in the aggressive drawdown control session we did. So I've just posted that on YouTube, by the way. That video, aggressive drawdown control. So that is like a 30-odd minute session from this morning's live room to do with drawdown control. So that's on the YouTube now. But what I didn't cover in there this morning, I normally look at the hourly chart for levels to do drawdown control. But what I quite often do, which is what I'm doing in this case, is I monitor M15 and wait for that reversal alert to kick in, basically, because I want to make sure we've got some sellers. I don't just hit the button. I want to make sure we've got some guys actually wanting to go the way I want to go. So that's why that's trailing there, because obviously the EA isn't going to be taking this trade. I am. So ordinarily what I would do is actually wait for that to... Because the danger you run by using pending orders like this, like a sell stop, you can't see it, but that's a sell stop. The danger you run is it spikes down, triggers your trade, and then jumps up there, and that support rectangle holds. But the other danger you run is when this move starts, it goes like that. And by the time you have got that reversal alert, you've missed half an ADR. That happens as well. So I prefer just to get in. Pound CAD's just hit ADR. We got some movement on this Canadian dollar ahead of the news by the looks of things. Big push up on the pound CAD. Doesn't look like pound strength. It's Canadian weakness. So we got some Canadian dollar weakness coming in ahead of the news, which is interesting. US dollar CAD having a little bit of a rally as well. Right. So that's also on the website as well, by the way, in the free trading education videos section. Should be in there as well. Ah, there you go. Haven't refreshed it. Let's clear the cache on that. So yeah, it's in there as well on the website if you want it. Right. So there's your 5 minutes on the Dow. So you haven't got a break on the Dow yet. NASDAQ. S&P's already broken long, but your Dow basically looks like it wants to try a break. So up to you if you want to take it. I'm just steering clear at the minute. Right. Aussie dollar CAD weekly range hit as well. Today, because Canadian dollar is really weakening ahead of this news. What worries me is they're enticing longs in for a collapse on this, meaning Canadian dollar strength. Either that or they've leaked the rate. And they know before we do up for everything against the Canadian dollar, which means weak Canadian dollar. Just watching to see if the markets are going to react to it. Nothing much happening, but this Canadian dollar is certainly weak. So RSIs, obviously ADR-wise, there's only those ones we've looked at. The pound yen, the pound CAD has obviously just hit to the upside, so there's a potential short opportunity on that one. That's a really nice level as well, look. So that is your yesterday's high, previous day's high resistance at ADR. However, if this is going to be a break and they are going to not be a false breakout and push back down, you've got no real stopping point until you get up to 150 ADR today. So if this is going to rally, 150 ADR would be a spot on place to start looking for shorts. Failing that, you're looking up at 200 ADR for the next resistance above it. Obviously, we've got propulsion gaps on the 15-minute chart there. The Dow's really rallying out the highs. Dow's gone. The NASDAQ, however, is stalled, as has the S&P. Really whippy. The market's just all over the place today, isn't it? So yeah, there's your ADRs, weeklies. Obviously, we've just had those two hit. We've looked at the Aussie New Zealand. We know about that one. The Aussie CAD has just hit as well. Let's get through the RSIs and get these done before we get the Canadian dollar moves started. So Aussie dollar, big moves on all Aussie dollar. We know about this. Obviously, we looked at these this morning. Aussie dollar CAD, 4-hour RSI extension still to the upside. So this is extended now. This has only just got extended because this has been a little bit more orderly in its movement. We've got a nice level coming up. This is actually the 2-week high, but that is kind of what I would look at as being the high. That was the week before, which is this high here. But this area, roughly around there, which is 150 ADR, is where our next resistance level is going to be. So if this does continue to push, i.e. we get negative Canadian dollar movement, this is where I would expect them to push up to before we get some kind of reaction. This has been much more orderly, the Aussie CAD. We've had a lot of movement. You see how it expanded out there. We've had a lot of movement up and down in this one, but it is just extended. I wouldn't go getting into any trades ahead of the news, obviously, because you're literally flipping a coin. If you go and hit the buy or the sell button on the Canadian dollar right now, it's going to go anywhere, isn't it, in the next 20 minutes? So might go your way. If it doesn't go your way, you're going to be in trouble, aren't you? Steve, stop being a stock tease and release the OLB version 2. Good one. I've just broken it, so I've got to fix it again. Annoyingly. This is the problem with development. You fix what you think is a problem, and as you fix a problem, you create a problem. And then you have to fix that problem. And if you're fixing that problem and creating another problem, you end up in this thing where you're just in a never-ending cycle of fixing problems. But this is why development needs to be done properly, because live testing shows you where your problems are. Back testing shows you what the ideal world would be like if we lived in a world where everything was a spread, where nothing ever shifted and everybody made a fortune. It doesn't exist. John, afternoon. Aussie dollar Swiss, parabolic, same as the euro. It's just parabolic downside on the Swiss franc at the moment. Aussie dollar still going strong. Extended, embedded. These Aussies, there's very little we can do about them until the market decides it's had enough and it decides to do a profit take. So extended, you will already be in this on the 4 hour. Hourly, we haven't had any extensions. So there's no trades on this one. But obviously we've just come above this monthly level. So a monthly extension, usually I look at half an ADR for a false breakout. We're pushed up 22 on this, which is half an ADR. 23 is half an ADR. So this is potentially a false breakout area for the monthly as well. We did put in a new high though. So nice extension. It's got to pull back and do a profit take at some point. We're up at the 72. We looked at this morning. This is a perfect point for a bounce back down. But structure is shifting back to the upside. Either way, if it's going to continue on that way, it's going to need to pull back before it does so. So there is an opportunity for a short. Just need to wait for some weakness on this Aussie. It's just not giving it, is it? Look, there's a lovely support. The support rectangle held. Again, great example of why the market reverse alerts indicator works the way it does. It uses the last batch of down orders before the high. And those are usually where if the market isn't going to break, it bounces from, because the guys that tried to sell ran into buyers. The buyers bought. Next time we get to that level, this is where the buyers bought. Therefore, the structure holds. This is why the support rectangle works on the last down candle before the high, and vice versa for the other side. So that's holding at the moment. Reverse alert on M15, as you can see, didn't hold. So last down before the up is where the buyers added again. So nicely extended. Obviously, we know it's been extended for a long time. It's been extended since the beginning of the month. Aussie dollar yen also extended. Just scaled out of one of these on the hourly. Got two positions on this. I don't mind being short against the yen, because I think if this US dollar yen continues, they are going back down. So at the minute, we just got this strong push and accumulation break. Normally when we get pushes, we get 3 legs of push. This is leg 2, potentially starting to accumulate. So I think this might go one more leg, but we will see. From a resistance perspective, obviously we're out in the clouds at the moment. We have just broken up above this high, this old previous high. There's lots of highs over here we can look at as well for potential resistance points. So we've got these highs here, we've got one there, we've got one there, we've got this level here, we've got this level here, we've got another level here. So there's tons of spots the market could pick to potentially start a profit take move from, or rather sellers start to sell in from. So we'll see what happens with that. But obviously that is still skyward, nicely embedded. We've got divergence on the 4-hour RSI. So we are flat, dropping on the RSI. We're pushing up with price. So price is pushing on low volume, which means there's not many people left up here that are interested in selling. So when you get divergence, it usually means the buyers are just going to run out of people to sell to. They will start to sell. Then the sellers will start to see the move, and then they will jump on board. So Looks good. Aussie dollar yen. It's only just got extended though. Aussie dollar, New Zealand dollar we know about. It's broke. There you go. So the Dow's just pulled back down. So this is kind of what I was talking about today. Doing that until Canadian release. Market's really not going to want to pick a direction until we know which direction the CAD's going. So just wait. If you want to take a good breakout today, actually, when we get the Canadian dollar news, potentially taking the 5 or 15 minute prior to that news. So let's say, for example, the news is coming out in the next 3 minutes. That high, that low, yeah, take a break of that. Because when this market goes, it's going to go. So you don't want to take too tight because obviously you know what news does, can whipsaw. So take a nice range, take a 15-minute range. So let's say this candle is going to be moving up to there. That's your high of 15, that's your low of 15. Right now, that's the low of 15 and the high of 15. So you could take those as a breakout on any index you want, really. I mean, obviously the NASDAQ, you're looking at that. So it's a lot tighter. You're going to get a lot much bigger, easier risk reward out of it. But just an option if you want to. Obviously, you can do that on FX pairs as well. If you want to trade the news, I just don't trade the news because I get stung too much on it. Aussie dollar, New Zealand dollar. We know that's extended on the 4-hour and it's also extended on the hourly. Just got re-extended on the hourly. We know about the extensions on the hourly on this thing. It's just, that's the first, look at this, actually. First entry, look, just about got extended. Since then, we've literally held the 50 on the RSI. This is the first time we've got extended again on the RSI. So it just shows you the additional strength that's now coming through on the Australian dollar or weakness on the New Zealand, either or both. So having an RSI extension there, this is what I was talking about this morning. And if you watch that video that I just put out on YouTube, or I think I said it in the Telegram group, this is a particularly nasty squeeze. You get squeezes where the market goes mad and then it just accumulates and pops, and then it accumulates and pops, or it just goes parabolic like that. Those sorts of squeezes are, you know, you can understand why they're happening. This one is particularly nasty because what it's done is it's literally teased you in all the way. It's teased you in and it hasn't gone strong. We haven't had an ADR in here at all until yesterday. What it's done for 5 days is just grind within ADR. So it gives you lots of reversal alerts, which will trigger lots of entries, but it never gives you any kind of pullback. It just gives you a quick entry and then it jumps back up the other way. But it doesn't go far. It's just one of those, it's just a hideous, hideous squeeze. It's just ugly. You know, they're normally, yeah, all right, we're wrong, fine. Just get up there and get back down again. This one, it's like the trend from hell, isn't it? It's just awful. Pound US, so the US dollar's moving as well by the looks of things. We just had an ADR on that. Or is this the pound rallying? A little tricky to tell. US dollar is certainly weakening. So this is US dollar weakening. We've got a little bit of strength on the pound. A lot of movement. Market's getting ready. There's a lot of shifting of currencies going on at the moment. We've got a lot of pre-market activity, or pre-news activity rather. So Aussie New Zealand, very extended. Aussie US, also extended. Obviously, we've got some US dollar weakness coming in at the moment. So obviously this is probably going to hit ADR. So that's squeezing as well at the moment, but not particularly badly. Since the entry, didn't quite get an exit there. Really annoying. We got 30 pips. Half an ADR, which is what I target, is 33. So I was 3 pips away from not being in this. Since that initial pullback, flag, we've had a push, flag, push, flag, push, flag. One of these flags will turn into a profit take. One of them. So again, we need to see what happens with this. Canadian dollar strength will give us US dollar strength, which will give us Aussie US coming down. However, the opposite obviously will go the other way. Mumo, 4% today from the ORB. Closing shop, popcorn in hand for the Canadian dollar news. Good job. Exactly the right thing to do. Exactly. That's what the ORB is all about. If you get the ORB, it works, you stop. That's it. I'm done. I've got $1,200 in the bank there. I've got $1,300 in the bank there. Forget it. Not interested anymore. Especially with what this lot's doing. Getting very depressed with my Australian positions. I've only got 2 on. Obviously, they're both in drawdown. Euro odd. This has just started to move. So if you look at the Euro pairs, they've all had a pretty good day today so far. Apart from the pound, obviously, has been rallying as hard as the Euro has, which has kept that in check. So we've got some decent movement. So the Euro odd, we can see the Euro has actually managed to gain ground against the Australian dollar. So we've had a good move on the Australian dollar today, again. However, this Australian dollar odd shows you how good that Australian move is, that European move is, and the fact that the Australian dollar hasn't been as strong as the Euro today, which means that the Australian dollar isn't actually that strong. It's just everything else is weak at the moment, and it's making it look a lot stronger. So I think we've got a good chance of this starting a move. We've had a reverse alert on the hourly. We're extended on the 4 hour still, just about. Although that is now starting to tick up. So we're well below the 15 level, which is what we looked at this morning. Just starting to tick up. So this is potentially the spot. I've only got 2 positions on this. So no, I've got 3 positions on this. So there's no need for an aggressive move on it. It's only an ADR to break even, and obviously you would expect it to go a lot further than that. But if you do need it, this is kind of where you want to be looking. Just watching this NASDAQ, look, stacking orders. Gotta go. Flip a coin. Symmetrical triangle formation going in on the Dow. Everything's contracting. They're getting ready. I think this is going to be a biggie on the CAD. So Euro odd, Euro CAD, obviously we know about. This thing's just started to move up. It's come straight off the this low here. Oh, sorry, this low here. I don't think that's the reason this has reacted here. I think this is just a pullback. Potentially, obviously, we could get that movement or that movement next. We don't know. So next level on this one, which is what we looked at this morning, is here, which is 150 ADR. So if we get strong Canadian dollar movement, i.e. we get a positive result off of the interest rates and it hits 150 ADR, that would be a lovely point to start buying from. There will be limit orders there. We know because there was there. There will be again. Whether or not there's enough to overpower the volume that comes through the Canadian dollar, that is whether that will decide whether it bounces or not at that level. So we will see. But that's extended on the 4 hour. Was extended on the 4 hours. Sorry, Euro CAD has come out of extension now on that move. So this is just about to unlight itself in the next 3 hours. And pound odd, big extension to the downside. 3 positions on that one at the moment. Again, parabolic move, same as the Euro odd. If you look at the 2, they're virtually the same. Yeah, huge parabolic move. Profit take, just waiting for the profit take. Big embedded. It is starting. Look, we've got a lovely bullish candle forming there, but it's all going to change. The view of the market could well change in the next 5 minutes when this new rate comes out. So I've tidied up the retail sentiment, by the way. One of the sources I use for retail sentiment I didn't know, I hadn't looked, I don't look at it, it's all automated, but had started introducing crypto into their sentiment. So I was suddenly getting a crypto feed coming in. So I've got rid of all that crap. There's a load of crypto rubbish in there. So yeah, if we look at the fundamentals, obviously on the Canadian dollar, we are now sitting at 4.5. Inflation is better than a lot of them. However, it's going the wrong way. Their unemployment figures are really, really high, which is why they're not wanting to do this. Interest rate rises has a negative impact on unemployment because things start to cost more money for businesses. They start laying off the first asset they possibly can, which is always staff.
unemployment goes up with interest rates. So this is the, I think this is the second or the third freeze. I think this is the third freeze. One, two, yeah, this is the third freeze. So I would expect it to freeze. I wouldn't expect it to go up because when you look at the fundamentals, unemployment is not dropping. Yeah, inflation is creeping up. So if they put that up, yes, it's going to help that, but it's also going to make that worse. Their GDP is holding nicely. So I think the thing with this is they are hoping that as the US gets on top of this, it will help them as well. So I think that's probably their playbook really at the moment, because they don't want to do much more with this. So we will see. We're not going to get any forward guidance, unfortunately. We don't get a press conference, but we will get the rate statement, which may give us clues. So we've got 2.5 minutes to go. We just have some US news come in. Fed to hike rate at least once more, say 32 of 86 economists. That's not a majority, is it? 5 to 5.25 in June. So again, mixed messages coming from the US. NASDAQ's just pulled back down. So we're coming back down to the open. Right. What should we watch? Let's watch US dollar CAD, and let's watch the Euro CAD as well. So US dollar CAD, obviously, the US dollar will tend to run with the Canadian and vice versa. So if we get a big move off the CAD, this isn't necessarily going to be the best gauge as to the strength of that move. Whereas the Euro CAD, when the rate comes out, they will pile into or out of the CAD, and this will give us a better gauge as to actually what is actually going to happen with it. So if you want to trade the news, I'd look at something like that. If you're brave, if you get slipped by half an ADR, don't blame me. You can see the spread's already getting a bit wild. Highly likely my terminal is going to lock up as well, because it usually does over news. If CAD rate stays the same, what would you expect US dollar CAD to do? Ordinarily, I would say drop, but we're not seeing the same reaction off of interest rates as we expect at the moment. Interest rates will do what currencies are doing what the hell they like. Typically, what used to be the case was an expected news event would be bullish. So the only thing that would reduce currency's value is an unexpected miss. So if they came out and said we're going 4.5 and they came out at 4.25, it would drop. If they came out at 4.5 or anything above that, it would rally. That's what used to happen. What we're seeing now is, as expected, news results tanking currencies. Euro and New Zealand both collapsed off of expected interest rate rises. There we go. Markets in. There you go. CAD down. Sorry, US down, CAD up. Indices, very quiet. Okay, US dollar CAD, 125 ADR. Euro CAD, so this is massively bullish. So let's have a look at what it is. 4.75. So we got an increase. Wow. Okay. So that's no impact on the indices at all, look. That is a door now. Go on. So big strong move, obviously, of the Canadian dollar. Where was that level I was looking at? Aussie dollar, wasn't it? So Aussie dollar CAD, obviously, you're about to get a reversal on that.
Can't not. Let's come straight down into the monthly, look. To the pip of the monthly resistance. I suspect this will be really strong Canadian dollar. So US dollar, you will probably find rallying with it. No, it's not. Not much impact at all. Oh, yeah, there it is. So Euro US probably coming down marginally. Look at it. US dollars not reacting at all to this. Interesting. Euro CAD obviously is. Aussie CAD, pound CAD, all down. US dollar CAD 150 ADR. Pound CAD, that's about to hit ADR. ADR in one candle. New Zealand dollar CAD T drawdown control just done on that. I was going to say TP. I was going to say I thought I was long on that. Yeah. That's come down. Might get a pullback on this. So this might be an opportunity if you want to take it for a long and assume that we're going to retrace this move. So with these news candles, it either will just go like that and collapse and it will continue the move, or it will completely retrace the move and then they will decide which way to go when they've actually done the analysis. So this is the knee-jerk reaction. The analysts will now look at this, redo the scorecarding. The scorecarding will then say, right, we need to adjust our Canadian dollar positions as this. And that will either mean pull out of these positions or carry on. As it was an unexpected result, they will not have factored in that much movement on the Canadian dollar. So you would expect them to pile into the CAD. This is why we get big, strong movements with positive news events, because they factor in what the interest rate is going to be by buying a certain amount of that currency. When you get that interest rate, they have a profit that they expect to achieve there. If the interest rate goes higher, they will have had a shortfall on it and they will add more in. If it comes out lower, they will have overshot and they will need to take a loss. So you would expect them to continue to push on this. But that's what we would normally expect at the moment, as we know, regardless of what happens. They just don't seem to be doing what they usually do. NASDAQ's just tested the opening low and rejected. DOW has just tried to do the same thing as well. So indices really not reacting at all to this. Look, we're just testing the lows again, which seem to be bought up. And again, not really expecting much movement on this if we're not going to get it on the US dollar. So the US dollar is obviously not really batting an eyelid to this, is it, at the moment? Very little movement. Interesting. We'll see what happens. So that first 5 minutes is now in. So we'll see if they retrace this. From a stop loss risk reward perspective, playing this initial retracement is 16 pips to 47 pips. So that's a 3R risk reward. If you want to do a quick stop loss scalp on it, may or may not work. Odds are 50-50, aren't they? It's either going to continue its move or it's going to retrace it. It certainly doesn't seem to want to go particularly strong, does it? Look at the ADRs. US dollar CAD, we obviously had that massive movement on. Pound CAD, that was an ADR hit already to the upside. That's it. Aussie CAD was a hit already as well. Look at that level. Straight into it. Boing. Right. Love the thumbnail of my aggressive drawdown video. I know it's good, isn't it? I was trying to think of. I'm trying not to be boring with my thumbnails, and make them a bit more descriptive, or you know, so that people can look at it and go, "I know what that's about," type of thing. I was trying to think what's aggressive, and all I did when I was going on the stock photo place, it was like just a load of angry men, and I thought, well, it's not really about being angry, is it? It's about getting even, sort of thing. So I just thought a lion came up, and I was like, yeah, he looks pretty aggressive. Yeah, aggressive lion doing drawdown control. Difficult to know what to do with these indices. I'm not doing anything with them, but there's no real close direction. So these candles, obviously, we got outside bars gone in on the news on the S&P and the Dow. The NASDAQ's just retested those lows. So this, I would say, if you wanted to trade the indices this afternoon, treat that as your 5-minute ORB. And if they're going to make a move, now we've got the news out, now is when they should really start the speculative move for the day. So take a break of that candle and see if you can get a trend today. That's really all you can do with the indices. Now we've got the news in. We know the US dollar's not reacting to it. The question is, are they going to continue to pump this CAD? No real movement at the minute. John, can you set the MRE to both take automatic drawdown at certain levels and to fully exit all trades at a certain percentage loss? You can't at a percentage. Well, yes, you can. The way to do that. So what you would do is your drawdown control, obviously you would just set up as you want it to be. So close out like 30% when you get to -1 ADR or whatever you want to do. And that will just gradually do drawdown control. If you want to close all positions when you get to a certain amount, you can't select a percentage. So what you can select is a close all when X in profit or a close in loss when at X money. So this is the one you would use, close in loss when at X money. So you would set that to be something like whatever. So let's say, for example, you want to get out of everything and just shut the whole lot down when you get to 3%. Yeah. If you're trading a 100K account, that's 3 grand. Yeah. So you would set that to be -3,000. And what it will do is if the instrument gets to -3,000, i.e. 3% of your balance, you'll just shut it. Yeah. So that's how you would do it. So that all you're doing is you're converting a percentage into a monetary amount. So it can do it. But your percentage loss is whatever percentage you set. So that's what it's there for, basically. It's there as a fallback for this isn't working, get me out, shut it, run away type thing. That's how you would do it. So we had a bull candle go in on the CAD. So this is what I mean by this initial knee-jerk reaction. Oh my God, it's bigger than normal. Quick, dump a load of money into it. The analysts are off going, hang on a minute. Are we really sure we want to dump money into the Canadian dollar? Look at what's potentially going to happen to the US when they default. The CAD's going to get dragged down with that and oil isn't rallying. So now the analysts are going, our scorecarding doesn't say you want to be buying this thing. It says we probably want to be neutral on it. And they'll go, oh, right, okay. And all we get is a whipsaw V-shaped recovery. That's what's going on behind the scenes in the banks. They're now scorecarding it. If the scorecard does not say what they would expect it to be, and standard is let's buy on a positive news, they will undo it very, very quickly. That's why we get those V-shaped and A-shaped recoveries on news events. However, until the calculators are finished ticking, you just don't know. So risk reward based trade, very good. However, if it's going to go down, the trouble with going down is sky's the limit, and it can go absolutely anywhere. What did the Aussie dollar and New Zealand dollar do off the back of that? Came down. Okay, triggered aggressive drawdown control. Let me put that up there because that's a stupid place to have your stop. So that was 1%. I'm just going to increase that to 1.3. Okay, so 1.3. So getting in aggressive, 1.3 loss. Ideally, I'd like this to have got further today up to ADR, but I think if they are going to rejig, they're going to do it off of that news event. So an hourly RSI, an hourly reverse alert would be spot on. You see what I mean about the reversal alert? Didn't get it. So there's the entry. Triggered in, but not gone. So we'll see if this one holds. If this one holds, so my I didn't see where my average was. I think it was somewhere around about 125 to 150. So we jumped up within ADR now. So what I need is one ADR push, and I have the option then to do what I like. So again, as we covered this morning in the session, the whole purpose of aggressive drawdown control positions is to get that average close. So if we do get that start of a move, it tends to be violent. We could get that exit as quick as we can. Or scale out with a load of profit. Or hold on to it and go, screw you, Aussie, New Zealand. I'm going to take 7% profit. Up to you. Okay, CAD's double topped off of that 5 minutes and put a new low in. So maybe pushing. Kind of really want to take some. Look at the mess on the Dow. State of this, look. Certainly, there are not enough sellers to drive short at the moment. So, looks like a good buy where we are at the moment. Have you ever tried the ORB pre-news on an FX pair? Yeah, I have. So we did it in the live room a while ago. The problem with news is slippage. So you saw how wide the spread was. So let's say, for example, Euro CAD, you were trying to trade this. If you had a pending order on the 15-minute high-low, which is there, so we can see it. So your 15-minute pre-market, or in this case pre-news, that was your high, that was your low of these three candles, which is your 15-minute. So your pending order would have gone in there and there. As the price was here, you can't see it because it's too quick, but you've got no idea what the spread was there. If they widened the spread like that, you would have been triggered in on that long and immediately stopped out on it. This happened to me this morning on the Dow Jones. If you go and watch this morning's live room, watch the ORB, which will be 10 minutes into the session. The Dow Jones, within literally 1 second, took out the high, the low, and came back to where it was. And this is what happens on news. We had an incredibly volatile open this morning. There's just a huge dump. The volume was 3 times larger than normal this morning. I don't know why, but someone dumped massive moves into the market this morning. When you get a news event, you get spread. So the first problem is that. The second problem is slippage. So you might request an entry there, but you saw the speed of that candle. Let's look at it on the 1 minute chart and see how quick that was. I haven't got a 1 minute chart there. Hang on. Yeah, so there's your candle. I mean, if you look at it on a tick chart, that was the move within a minute. Your entry, if it was there or there, for example, that candle would have got to there. And by the time you've gone, enter me, please, it's here. And they go, okay. This is going back to what I was saying about yesterday, if you were here, Mooma, I think you were, about brokers and the contract you've signed with your broker. You signed a contract with your broker that authorizes them to execute your trade at any price they deem fit that they can achieve for you in the market. They can't achieve that because there's too much volume, too fast, too much air in between orders because the banks are eating all these orders up and you are at the back of the queue. Yeah, the banks and the market makers jump the queue in every order execution. They will always go and get the orders before you do. So by the time yours gets to the queue to get filled, your entry is there. Your stop is here. Yeah, you wanted to risk $500 on that. What you ended up doing was risking $1,500 on that. Yeah. So that's the problem with it. Try it next time. Do it on a demo account because demo account, you're going to get actually better market execution than you will on a live account a lot of the time. Because it's not real, so they just execute the orders. Yeah, we're not waiting for a dark pool to fill you. So you know, it's. But if the news event, if it's a wider range or the news event is slower moving, it's not a problem. When it's massively quick like that, you saw how quick that candle. It was there, and it was there within seconds. Your order would not have got executed there or there. Would have got executed wherever the hell they wanted to put it. You can't simulate that in a backtest. You can because you can use actual spreads. If you use Tick Data Suite, they'll give you actual spreads from the broker. So you can use variable spreads. But even so, the spread you got there is not going to be the spread you're going to get next time there's a news event. Yeah, I've been stopped out for $750 on a trade that actually never got anywhere near it during news. It was a Swiss yen, I think we did, didn't we? I can't remember. It was a while ago. Yeah. This is why news trading doesn't work. All these people that sell these news trading courses, they look great on paper. You can't trade it in the real world. I've tried it. I've tried loads of news trading courses. Not loads of news trading courses, loads of news trading strategies. I've done news trading courses in the past. And it all looks fantastic because your risk reward ratios on a move like this is absolutely huge. So if you look at the, let's say for example, we just wanted to trade the 15-minute pre-market on this or 15-minute range before the open. Yeah, that's our risk reward. We are sitting on a 3R. Simples, isn't it? But you wouldn't have got a 3R because your execution would have been there. So what you would have actually achieved was a 1.2, maybe. So on paper, where you've got all these 3R returns, when you actually go, we only got 1.1 returns, that P&L that looked really, really nice all of a sudden starts going the wrong way. It just doesn't work. But, you know, this is the thing. It looks good on paper. So does compounding your account. Looks great on paper. Try it. Doesn't work. Because your losses are compounded exponentially as well. Sheesh, what other bear traps are there in relation to slippage, etc.? There isn't. It's just slippage. This is why I position trade. Because slippage, spreads, commission, swaps, it affects you far less when you're trading hourly, 4-hourly charts. When you're scalping, this is why I say all these people that go, oh, I've got amazing results with the market reverse alerts indicator on the M1 chart. I'm making an absolute killing. Come back and tell me that in a month. Never hear from them again. Got a guy that set up a Telegram group specifically to trade synthetic indices on the 1-minute chart with the market reverse alerts indicator. He asked my permission to set the group up. I'm in it. Dead for months. All of a sudden, he's gone quiet because he had a lucky run on the 1-minute chart. You can't sustain it. You won't get those spreads and those results on 1 minute. You're trading algorithmic chop. There's absolutely no logic to it at all. Go and ask ChatGPT if it can find any algorithmic patterns within the 1-minute chart. No chance. Doesn't exist. Random noise. So trade higher time frames and also backtesting. If you backtest on higher time frames, your results will be much more consistent with what you achieve in your backtests, because the variance of your stops is so much wider that it's unlikely to be affected by spreads. So when you've got a tight stop on a 5-minute strategy or a 1-minute strategy, the variance between there and there is the difference between a win and a loss. And if the difference between a win and a loss is a 1.5 R, that strategy will just die immediately. As soon as you try to live trade it, it just doesn't work. CAD Yen ADR. So CAD's still pushing, as you can see. It is still going to go further today. At the moment, we'll see. But CAD Yen's certainly gone. We've got some weakness in the yen by the looks of things. So the yen is flailing a little bit. We've got some US dollar strength coming through now with that Canadian dollar. Wow. So bullish, potentially indices. The Dow is just stuck, absolutely stuck. John Wick has entered the building. Did you show how the 4 VPS demo accounts are holding up? No, I mean, they're not good. Obviously, they're overexposed and they're in drawdown. I haven't looked today. NASDAQ's just gone out the low. Wrong one. So NASDAQ's just taken the lows out. S&P is trying, has just done. Dow's dropping as well. So the DAX is dropping as well. So the Dow's the only one that's stuck sideways at the moment. Big drop. So yeah, I mean, the VPS accounts will be doing pretty much the same as the others. So ADRs, 2.97 in drawdown, 0.5% banked yesterday, flat today. Not a lot actually there. I mean, the thing with the ADR is it gets out a lot quicker. Obviously, it's a scalping strategy, so it's in and out faster. But look at the Australian dollar exposure, 7. So that will be obviously reliant on the Aussie having a rest. If the Aussie doesn't have a rest, it's going to get hurt. H1 obviously is the account that I'm looking at in the live room. That's 5% yesterday, 3.24 today. Sitting in 13. Aussie New Zealand's going again, look. Aussie's killing it. So yeah, that's that one. H4, 26% drawdown. That's 6.83 drawdown control yesterday and 5.17 today. Sitting in 26. But again, this is why. Australian dollar exposure. See, this is why I wanted to have these accounts in here. This is the whole purpose of it. This shows you what happens. If you get overexposed, you will get squeezed to death. That account is in danger of blowing because it's overexposed. On a squeeze, this is a squeeze. This is why you keep your exposure like that. Fine, go long if you want to on the Aussie, not a problem. But don't take any more shorts, because instead of having 2 risks on, there's 7 risks on. So your exposure to the Australian dollar is 3 times higher than it should be on this account. Therefore, it has to do 3 times the drawdown control and will sit in 3 times the drawdown. So if you were trading this as a normal account, you would be sitting in, can't do maths in my head. That's why I have calculators. You'd be sitting in roughly 8% drawdown, and you'll be sitting in 611. You would have taken around about 3.6% loss. Yeah, so all fine. 3.6% loss on a squeeze, not the end of the world. 8% drawdown on a squeeze, not the end of the world. 3 times the exposure, ouch. Yeah, pain.
hedging, not really affected because it will have had opposite direction trades on, which will have banked. So now it needs to get out of those Aussies. So flat yesterday, big day before, 1.89 drawdown so far today, still positive on the month though. So Dow's just started going. Yeah, so that rejection we were looking at, they're starting a move. So yeah, H1, you've got Aussie New Zealand in 2.63. Euro pound is in 2.3. CAD Swiss in 2. Those are the only things really. New Zealand CAD's in 1.9. So nothing particularly bad there. Obviously, Aussie New Zealand's got 4 on. The worst number of trades is Euro US dollar there in 2% of drawdown, but it's not really going anywhere. So yeah, you get a lot of DD with a lot of exposure. £125 yen. Still pushing. So again, ADR reversal on that. Pound yen just got that one trade on the initial reversal alert today, so potentially it's going to take a second entry on that. The first reversal was there. It's going to need to push a little bit further, I think, than that to get in. It's going to need to do at least 60 pips to the upside, so it's going to need 150 ADR before it takes a second today. So if we do get to that 150 ADR, that was the one we were looking at, wasn't it? 150 ADR on that being the potential bounce point. Somewhere up there would be a lovely short, staying within that range. It's all struggling today, look. Give it, I think if you give it half an hour for this, the market to calm down a little bit. We've got a new quarter point rate hike in July just come in. Briefly pricing a quarter rate hike in July. One more rate hike from the Bank of Canada by September. Look at that extreme greed. Canadian money markets see near 50% of another rate hike in July, fully priced in further tightening by September. Yeah, so one more rate hike on the CAD, which would make sense, but obviously that is going to drive up their unemployment. Very difficult juggling act. Yeah, you got to upset someone, and they are going to be upsetting the people with jobs. Not updated yet. Give that an hour or so, that'll update. Anybody got any other pairs they want to have a look at? Dow's off. That's held that low, look. See if we get that rally back. Anybody got any other pairs or anything else they want to look at? Look at that. Comes down, make sure it gets far enough to do drawdown control, then off it goes. This doesn't look convincing, this Canadian dollar move, I have to say. At the moment, it's not really rallying. The Dow's pushing back up on highs. We're just about to get a new high out the Dow. So good place to sell, potentially. See, that was the buy. Oh, I'm tempted to take that. Just make the Aussie dollar go down. Hey, we'll try. We need to draw again. Draw a big old weight on top of him. Just use 10 tons. There we go. So I'll leave that there. So that should drop. First time I did this, someone in here was like, sorry, I know this is a stupid question, but what is an IoT? Gotta laugh. Steve, on your VPS, you trade all pairs. What pairs do you trade on your live accounts? Whatever comes up. There's no, I don't have a set. Steve, go and read the manual. Go and read the handbook. It says in the handbook. I'll get the handbook actually. Yeah. Big, isn't it? It's in here somewhere. There we go. 2 main ways to use the market reverse alerts EA. Personally, I use the EA to manage my add-on entries for me. I get into the market in one of 2 ways every time. I either miss a trade and take a manual entry, and then I put the EA on and let the EA do my positions for me. Or I will see an opportunity and I will go, that looks good. And I will put the EA on it and get it to take the reverse alert and then trade for me. Yep. I do not run it on every single pair constantly, although you can. And in this document it covers, you can reduce your risk and trade every pair if you want to. But concentrate on exposure. So this is how I've always traded, using these dashboards. Yeah. An opportunity comes up on pound odd. I go, do I like the look of this? It's extended on the 4 hour. Yeah, that looks good. Brilliant. I'm going to take a reverse alert on that. Ah, crap, I've missed it. Hit the buy button, stick the reverse alert CA on it, let it take any additional positions for me. My exposure is now long £1 Australian dollar. Another trade comes up on the pound Swiss. I put it on. I go, yep, that looks great. I'll take it. I'm in 2 longs on the pound right now. 2 days later, pound New Zealand. Signal to go long on the pound New Zealand. I look at my exposure and go, I'm exposed on the pound. That's it. Follow exposure. Always has been. But this is what's been confusing people. This is why now there's a disclaimer comes up at the beginning and why I've written that handbook, because I can understand why it's not been clear. Where's it gone? It's a handbook gone. I just shut it, didn't I? But yeah, so follow exposure rules. So I don't trade Aussie CAD, Aussie New Zealand, and that's it. Because the thing you've got to think is you don't know when an opportunity is going to come up. This is what the dashboards are for. Opportunity comes up, Aussie Swiss. Opportunity comes up, Aussie New Zealand. I get into the Aussie. That's it. I'm in the Aussie now. Next alert that comes up on an ADR hit to the upside, signaling an Aussie CAD short, I ignore it because I'm exposed on the Aussie. These were the first ones that came up. I got into them. I liked them. That's it. So if you put it on, like there's 28 pairs. If you put it on 10 pairs, pound New Zealand, this is going nuts. Look at this pound odd. Is this the pound? No, you know what this is? Oh no, it's New Zealand. New Zealand dollar weakness. I was hoping it was going to be Australian dollar weakness. If you put the EA on only 10 pairs, right? And all this month, there's signals galore on the other 18 pairs that you haven't put the EA on, you're never going to take a trade. So you take trades on what presents itself to you if you like it. And again, taught in the bootcamp,
If you want to stay in line with the trend based on the 2472 moving averages, you can do. If you want to use the buyer scorecard on the website and go, I'm only going to short the pound US dollar, and if you get a long signal comes up on it, you don't take it, fine, don't take it. There's millions of ways to manage it, but the key is exposure. If you overexpose yourself, as you just seen there on the 4-hour chart, you overexpose yourself on a currency and that currency goes 6 ADR against you, you're going to hurt. That's the whole point of it. So you got to get into stuff that comes up. If you don't get in, and I've sat here for a week just watching the NASDAQ collapse out of its backside. What did I just say? That's a beautiful sell. I think I might take that. And I was hovering over the sell button and I didn't press it. See, I've sat in here for days on end, basically. This thing's been white for 3 days on the trot. I just sit here. Can't make money if the money's not, if the opportunities aren't there. And then all of a sudden, this lights up like a dashboard, and you're like, right, which Australian dollar shall I pick? Because everything's hit ADR today. Everything's hit the H1 RSI. Pick one. Which is the best? And that's where your analysis comes in, where you go, right, Aussie dollar. We've suddenly got a load of Aussie dollars that have hit the top, basically. So what we do is we go, right, do I like the look of Aussie CAD? Let's have a look. Are we at a decent support resistance area? Which is the most extended? Yeah. So if you get H1 extensions on 5 Aussie dollars saying you need to short them all, which is the biggest? If one of them's at 85 and the rest of them are at 75, that's the one I'm taking. Yeah, so you just get into what you get in. This is why I trade all pairs, and this is why I don't have a preference. I don't care what I trade. I just trade stuff where I know it's extended and the market's going to retract on it. What it is irrelevant to me. Ideally, I want it in a nice spot. So I want it, obviously, at an area of support resistance would be lovely. If we've had 2 hits on a resistance area, and we hit it a 3rd time and get a reverse alert, which is an ADR extension, brilliant. Because if it can't get through there twice, it's the 3rd time, it's probably not going to either. Sometimes it does. Then I manage it. Just get in. Again, in that thing, I kind of summed in the back of it. I've summed up, if you like, and you will have heard me say it in here before. Why can't I find it? I've summed up my view on the market, which is very, very simple. Yeah. The and finally page. Yeah. There's no right or wrong settings for the market reverse alerts EA. There are starter set files on the website. We know about that. Test it all, see what happens, and see what you feel comfortable with. These are the questions I get asked all the time. Which is the best RSI? Which is the best set file? What am I using? Which is the best time frame? Yeah. There is no correct answer to any of that, basically. You get into the market. It doesn't matter how you get into the market. What matters is what happens after you've pressed that button and how you deal with what that is. Yeah. When you get in, the odds are 50-50. It's going to go up, it's going to go down, it's going to move through time. What happens after you press that button is either you take profit or you deal with the position that hasn't gone against you. If you're using the 14 on the RSI, the 21 on the RSI, or the 7 on the RSI, means you're going to get an entry into the market. Which is the best of those? No clue. It completely depends on how the market moves once the 7 RSI has been extended. Will it come down quickly or will it push? I don't know, because I don't know. It doesn't matter which RSI you pick. Somebody asked me the other day, which RSI do I use? Do I use the close? Do I use the typical? Do I use the median? So, well, use whatever you want. I use the median because it's like the TDI. So I shouldn't use the close or the typical. Use whatever you want. The difference is that or that. So I'll get in there, you'll get in there. Or you'll get in there and I won't get in. Does it matter? You hit the button. If it goes your way, brilliant. If it doesn't, you deal with it. And it's the same with pairs. There's no pair. There is no good pair. There's no bad pair. Which is the best pair to trade? What do I think about trading just the pound yen? I don't have a feeling on it, because what I want to do is make money. And as long as everything in the market does this, yeah. What did I say about the parabolic move down? This is a profit take move. They're taking profit. Yeah. If you're not in it, you're going to miss it. It always happens. It's just you don't know when it's going to happen. You don't know which pair it's going to happen to. So you just have to get into stuff and stop worrying about. I think this is why we're preconditioned, isn't it? Every system or strategy you look at is preconditioned you. You must use this indicator. This is the setting you use. You mustn't exit until it's done this, that, and the other. There's rules everywhere. The market doesn't have any rules. The market goes up and down based on fundamentals. A lot of people call them fundamentals. All the technical analysts will call it fundamentals because they don't believe fundamentals drive the market. The Canadian dollar interest rate's just gone up. The Canadian dollar's powering up like a crazy thing. You telling me the fundamentals don't drive the market? And get another job if I were you. You know, it's just that it doesn't matter, does it? What anybody's opinion is, what indicators they use, what settings they use. What matters is if you've hit the short button, now you're in profit. If you've hit the long button, now you're in drawdown. So wait for another entry and then get in again and wait for the market to go back, because that's what the market does. It goes up and down. There is no crystal ball. That's the last line of that thing, I think, isn't it? I think that's why I put in there the crystal ball line. I was going to put John Wick on the end of it and I decided against it. Copyright reasons. Neither I or anyone else you will ever meet in your trading journey can give you a crystal ball telling you what settings to use or how to best get in or out or when to do it. If they profess to know where it's going, walk away. They don't. The market moves in random movements at random times. If they go up and down through time, you can benefit. Get in, get out, make money. You trade Aussie CAD, I'll trade Aussie Swiss. At some point in the future, they will move enough for you to exit those positions. Doesn't matter what you trade. Just don't trade them all at the same time. That's the only rule. And again, in that document, there are rules. And I put them in there specifically because they're important. Sizing, spacing, exposure. If you're getting too big, you're going to get hurt. If you're getting too close, you're going to get hurt. If you're getting too many on the same currency, you're going to get hurt. Follow those 3 rules and you'll be fine. You're going to get squeezed. You're going to lose money, but you're not going to get killed. That's the important thing. You're not going to blow your account when the market goes parabolic like the Aussie New Zealand. Why is it the Aussie New Zealand is the only Australian dollar pair that isn't coming down? Unbelievable. We got a nice wick anyway. This could be the start. We will see. Harris, how is pound CAD looking? Sorry, I missed one. Got to get back into hedging. Haven't been able to do it in years. Can't do it on your Feedle account, Brian. No. How's pound CAD looking? Well, right now, I haven't got a clue. It was looking really bullish this morning. Now it's looking really bearish. I don't know. Leave that alone for a minute, I would. Pound New Zealand longer term view. Well, it's a long. And it still is a long. Pound interest rate is 0.75 to 1% more. New Zealand, difficult. Possibly terminal rate on New Zealand. We're at 5.5. Could go higher. We've had much higher interest rates than this. So as long as this is coming down and continues to come down, we will start to see slowing. Slowing means negativity. So pound has said, yes, we got another 1%. New Zealand haven't mentioned anything. They're going up in small increments and they're at the highest rate out of everybody. Pound New Zealand's a long. Fundamentally and long term. Short term can do what the hell it likes. As you can see, I tried to short it. I got stung in exactly the same way as I did on the Aussie New Zealand. Look at that. We looked at this morning. Look at this move on the pound New Zealand. Parabolic, slow grind. Look at the Aussie New Zealand. Parabolic, slow grind. Look at what happened afterwards. Big retracement. What's coming? When? Hopefully today, because I've got a big position on it. Let's see. Excuse me. Penny just dropped. Thank you. That's right, Steve. Where is the PDF book found? In the Telegram group. I've just posted it in the Telegram group. I'll put it in. I don't think I can put it in chat. You can't put PDFs in chat, can you? Let me link to it. That link I've just posted in chat. Put it as an HTTPS. Okay, that link in chat will take you to the handbook. I will put it on the website as well somewhere. I haven't quite thought. I don't know where to put it. I don't want to put it on the Bootcamp page because I want people to. The idea is if you go to the Bootcamp page and you're watching the Bootcamp, you're watching the Bootcamp. The whole purpose of the handbook is to get people to watch the Bootcamp. So if you're already watching the Bootcamp, you don't need the handbook. So anyway. So if we took one trade manually on any pair, then we put the EA on it. Will the EA control the rest of the things? Yes. So the EA controls the trades that it takes. So again, it's covered in the handbook. Don't read the handbook, but I will cover it in here because obviously these are the questions I get asked all the time. So here, using the market reverse alerts EA. The EA is a blunt instrument designed to help you by semi-automating yourself. You are the trader. The EA automates things for you, so you can spend less time in front of the charts. Feel free to take manual trades where necessary if you feel it's a good spot, but the EA does not pay attention to manual trades. So if I go and look at the pound CAD and the pound CAD has done a reversal alert, yeah, that is what the EA takes as a signal. If it then pushes back up and pushes down, and that is where I spot it, I'll go, I like this short. I will hit the short button with a manual trade, open my VPS, place the EA on the chart so that one of two things will now happen. This will push down, I will get out, and I will remove the EA. This will push up, and the EA will scale in for me automatically. My manual will not be included in its calculations, but it will take trades. I'm interested in automating the fact that if I get into something and it goes against me, I don't want to monitor it and have to wait for manually me for pushing the button over and over again. What I want is the EA just to take trades for me, sure. That's what it does. It's programmed in the same way as it is with all the set files, just to scale in automatically half to 3/4 or an ADR apart, whatever it may be, when there's a reverse alert. Just keep getting me in short. I'm short on it and I want to keep getting short on it. EA, do that for me, please. You are my replica of myself. That is what I would do. But if I'm asleep or I'm making a coffee or I've taken a dog for a walk and there's a reversal alert, get me in. That's how I use it, how I've always used it. It's a semi-automation tool. It can be fully automated, obviously. It can replicate the exact strategies I trade. The trouble is, if you get a reversal alert at the same time on 5 instruments, all extended, you will get into 5 trades. It overexposes you. Yes, you could set it. So I could build in something that says, if you've got 2 shorts on the Australian dollar, don't take a third one. What if you get 4 at the same time? Like the CAD, right? We've just had a load of reverse alerts on the CAD. There's a load of signals to go long on the CAD, right? Which one do you take? How do you program the EA to say, I want US CAD and pound CAD, please? Because I prefer those because they've hit a nice support area. You can't, because it's not clever enough to do that. And I'm not clever enough to teach it to do that. You're the trader. Trade. Use the tools to help you trade, but it can't make a decision on what is the best Canadian dollar long to do at the moment. As far as the fundamentals are concerned, the best Canadian dollar long to take at the moment is the US dollar CAD, because it's a +3, followed by the CAD yen. So if you get a pound CAD with a CAD yen and a US CAD, I would like to take those two above that one or that one. You have to make these decisions. Yeah, that's not the wrong way around, is it? That's actually the other way around. You know what I mean? Yeah. If you can take two, how you can't teach it. You can't teach an EA which is the best one. That's an analyst job. It's your job to do that. And the EA will not do drawdown control on trades you take manually. So if I take a manual trade and the EA scales me into a second and a third, it's on me to manage this one. It will manage those. But if you're trading the hourly or the 4-hourly charts, you're only checking every now and again, aren't you? You're just checking on your P&L. That's what your P&L is there for. You to manage and monitor your positions. So if I see something getting a bit big and I realize there's a manual in there, I'll do manual drawdown control. That's what it's designed to do. That makes sense, Burke. Yeah. The EA will control as much as the EA takes. It won't control your own trades. Aussie goes down. Yeah, there you go. So that weight did help, didn't it? I'm glad I drew it. Now the reversal alert. There's your beautiful M pattern reversal. 6 minutes on this candle. 5 minutes, you've had it. And again, in there, there's this has all the videos you need to watch in order. Yeah, download the PDF, then watch that, then watch that, then watch that, then watch that, then watch that. Watch all these in order, and then watch that video, which rips apart a lot of that. But you need to know all of that so that I can rip it apart. And then you do the boot camp. And then finally, you watch this video that I posted today on aggressive drawdown control, because it's important and needs to be hammered home. So it is covered in video 4, but that's, I think, a little bit more detailed than video 4. When you've watched all of that, come in here. We have fun every day. Dow Jones is dead. If you're going to trade this today, only trade down here and only trade up there. I don't think this thing wants to go anywhere today. Aussie, New Zealand, let's go. So my, whoops, wrong one. I still need a hell of a move, obviously. I need an ADR. Certainly all starting to move, isn't it? Can you show which settings you are using on the ORB indices? So do you mean on here? Terminal? This is not the ORB EA. This is a variation of the ORB EA, but you can trade this on the ORB EA. So what you would do is you take the 5-minute pre-market. So range 1, you would set to 16.25, 5 minutes before the open. End of range 1 is 16.30, which is the open. Range 2 is the same, 16.25 and 16.30. Yep. Take range 1, take range 2, don't take range 3. We're not using range 3 at all. And Euro CAD ADR and New Zealand CAD's already hit. Continuous mode. So to replicate, you can't exactly replicate what the new version of the EA is doing, which is the whole point of me testing with this new version, because it's a different way of trading it. But if you put continuous mode on, that is as close as you can get to replicating it, which is pretty much the same thing. And I'm using a trailing stop, which is 150% of the range. That's it. That is basically what, sorry, and the TP multipliers. TP1 is 150, TP2 is 500. So we're taking the pre-market 5, which is this candle here. Yeah, we're pending above and below it. When the breakout happens, our TP is 150% of the range, and our trailer is 150% of the range. So the idea being is if you hit TP1, the second entry you've taken, because it takes 2 trades, is break even. So if it then hits TP1 and comes back and goes the other way, we stop out. Job done. We've made money. If it continues to trend, we go for that 5R. Yeah. The other setting you will need to set to true is this one down here. Take multiple trades if at the same level. That needs to be set to true because you've set time frame 1 and time frame 2 to the same thing. So it's going to try and place 2 pending orders at the same level. So you need to say that's okay to take 2 trades at the same level. So that has to be set to true. So this basically setup that I've just gone through replicates pretty much what this new version is doing. The difference is that this version has control, only takes 1 range, that's it. It takes 2 trades at 1 range or 1 trade at 1 range. And it has the ability to cancel off or not cancel off the opposing orders, and it then takes inside bar breaks to recover losses. Whereas the other version has what's called a continuous mode, where it will then try to re-get into that initial opening range. So it's a variation on the strategy, but the way that this works, it can't work with that because it's a completely different functionality. So as you can see here, we had a breakout this morning, which was a double-ended stop out, loss and a loss. We then waited for an inside bar. We took the inside bar break short. We TP'd 1. It then pushed down, pushed back up, and the trailing stop took out the second position. So we made 2 wins there. We waited for another inside bar, and the inside bar breakout was there. So that was a double top. Sorry, no. Yeah, that was a double top there. Inside bar break short, stopped out, so made another loss, pushed down, waited for another inside bar, took the break of that inside bar, pushed up, 150% of that range was a TP. Second TP was there, and we got out on the trailer. Or was that a TP? Might have been TP, that. No, it wasn't. TP was up there. So yeah, that was a trailing stop exit there. So when we started here, because we got slippage this morning, we were $3,200 down. When we got back to here, we were only $800 down. So this inside bar breakout system that's built into this new version is a kind of a loss recovery system. The idea being, if the move is wrong, we wait for them to pause. And usually before they reverse, they pause. So we wait for the pause, which is usually an inside bar. When the inside bar triggers, we take the break back up. But this new version is a lot cleverer at removing and adding. I thought it was. I think I've broken it because it didn't trigger correctly on the DOW, on the DAX. S&P this morning, this afternoon, even. Get your words out. Yeah, so that's what it does. But that's how you replicate it on the current ORB. So the current ORB works absolutely fine. I'm just still playing with logic. This is still in development. I'm still umming and ahhing how to best maximize the potential of it and minimize the losses, which is what I'm working on different variations of in the backtester. But it's quite complicated code. So I'm just trying to figure out the best way to handle these 2 scenarios, the initial break and then the inside bar break. They need different pending rules for removing them and adding them and stuff. So it's just all work in progress. Euro odd looks to be turning. That was probably a while ago, Whipping Post.
down there. All the odds are turning. Is this document public? It is now. Watch all of these just started this week, hopefully in the 5% club. Cool. Evening outro. Missed the NAS today? You did. I didn't. Trying to trade off of a Mac when at work is proving ineffective. Yes, quite possibly. Trying to do anything on a Mac is ineffective, isn't it? I'm Macist. I'm not very good with Macs. I'm useless with Macs. And MT4 is useless for Macs as well. It doesn't like accessing the marketplace, apparently, unless you run it through an emulator. Mumo, I need some advice. Up 5% on my Forex funds account, but 1 day to go before the minimum 10 trading days. Would it be wise to stop trading after 10 and wait for payday? On the funded account, I can't really answer that, but I would say yes. That's what I do. So when you get yourself to a level that you are happy with financially, stop. You've obviously got to meet the minimum trading days, but yeah, get yourself there and stop trading. Wait for payday. The Euro Yen ADR, Euro's on the move as well. And actually, there's a yen on the move, isn't it? The yen's weak today. Pushes on the yen. That's CAD yen, obviously, that is going to push. But so yeah, like I said, you've got to think of this like a business with funded accounts. If you've done 3 evaluations at $500 each, you've spent $1,500. Yeah. When you get a funded account, you are $1,500 in debit. Your cost of doing business is $1,500. So when you get that funded account, if you've traded it up 5%, let's say it's a 100K account, and you're now sitting in $5,000 of profit, as soon as you've met the rules to withdraw, you are now $3,500 in profit because your costs were $1,500. Your profit is $5,000. You are $3,500 net. Stop. Take that money. The danger you run if you don't do that is you're sitting on 5%. I have to bring this to the forefront, this document, and this is the first thing you read on that new document I've just put out. This, yeah. The danger you run is this: walking on water, right? You've gone from there, you've moved up to the Eureka moment. You now understand how this all works and you can make money out of it. Yeah. You get cocky. So you're 5% up right now. You're thinking, I've made 5% in 9 days. If I trade for another 9 days, I can make 10%. What happens? Tomorrow, you have a bad day and you drop down to 3.8%. You go, damn, I lost 1.2%, 3.8%. What you should be doing now is going, whoa, get that money out. Because what happens the next day? You lose 2.5% of your account, bringing you down 1.3%. Now you're sitting on 1.3% profit. You've spent $1,500 on your evaluations. You're now only in $1,300. You're in negative. Damn, I better get a bit aggressive on this. Oops, I've lost another 2.5%. Now you're in negative. Yeah. What you should have done is taken that $5,000. Because if you take that $5,000, you can then go, I'm not going to trade until payday. Payday is 10 days away. You wait 10 days, you draw that 5K out. Now you can do what the hell you like with that money, can't you? You've got a new account. You treat it every time you withdraw, treat it like you've just got a new funded account. How much do you owe in evaluation fees? If it's now 0, happy days. If you make $1,000, stop, draw it out. I don't know what you need to earn, what you need to pay as a mortgage, what are your bills, what are your outgoings. For me, I need to earn a minimum of 5 to 7K a month just to survive, to pay the mortgage, pay the bills, do everything I need to do. So for me on a 100K account, if I make 5%, that's virtually me done. If I can do that in 3 days of trading, that's it. Stop. Pay yourself. This is what people don't do. They get these accounts and they assume that what's happened in the past during that evaluation. If you think about what you've got to do in evaluations, yeah, you've got to make such a lot of
money in an evaluation. So you've got to make 8%, right, to get past phase 1. You've then got to do 5% to get past phase 2. You've got to do 13% before you even get your account. That's a bloody good month. 13%. There's not many traders who can return 13%. If you've managed to do that in 20 days, you're in the cream of the cream of the crop, aren't you? Yeah. What makes you think that you can sustain that? Market's not going to let you, because you're not going to get a run that lucky again. It's going to blow at some point. So you've got to pay yourself. It's the most important thing in prop, paying yourself. And people stop. So what they do is they get to 5K and they go, I'll carry on trading. And they just see that money whittle away. And at some point they go, I'm so close to blowing this funded account. They're sitting at 7% of their 10% max, and they just go 2% long, pop. Back to square one. That's 30 days of your life you've just wasted, and $1,500. Start again. That's the cycle. So be careful. Anyone want to purchase a MacBook Pro? No. Afternoon, Neo. Project Grey. Will the new version be available to existing users? It's a different product. It's not the ORB EA. It's not an upgrade. It's a totally different strategy. It doesn't work in the ORB. I can't shoehorn it into the ORB. It just doesn't work. I could re-release this as the ORB, but everything in the ORB that works off of three separate timeframes that you can adjust and everything, you'd lose all of that. So I can't. I'd upset too many people that live. I mean, I'm trading with the ORB now. The ORB, Mumo is trading with the ORB EA. He's just passed evaluation and he's on a funded account. So am I. I'm trading the 5-minute and the 15-minute pre, doing very well. Thank you very much. This is another strategy that I'm exploring, and it will be released as another strategy. It trades differently after the open. But if you want to trade this, just do the 5-minute pre-market. It's the same thing. The only difference is how you get in after that initial open is slightly different here. So this is a scaled back version. This is the dumb version, really. But dumb is better. Simplest strategies in the world are the ones that work. I trade the RSI, for God's sake. Doesn't get much simpler than that, does it? What's my entry criteria? This line has to be over that line, and basically all I need is a little bit of selling pressure. Doesn't get any simpler than that. Works really, really well. All these ones where you see like 3 different oscillators, 2 moving averages, supply and demand on the chart, and then big arrows everywhere. It's too many moving parts. You will never replicate what that thing's done in the past and the future, because the conditions are just not going to happen. It's just not back testable. It doesn't work. The simplest strategies in the world are the ones that work. All I'm doing is selling after a rally. Far too easy. No one does it. Everyone thinks it's crap. That'll never work. Look, if you go back in history, the RSI fails loads of times. It does, yes. Can you show me an indicator that doesn't? You're just trading wrong. You just don't know how to trade. You might have the right indicator, but you got the wrong strategy. Where am I located? I'm in the south. I'm not in Sheffield. You don't tell by my accent, I'm down south. I'm a southern shandy drinker, as I think people up north call us. Right, I'll leave it there for the day. Aussie, New Zealand, we've got the reverse alert on the hour, so it's better than we've had, isn't it? It was in Swindon yesterday. Above the M4, isn't it? That's miles away from me. So we've had the reversal alert on the hourly. So we'll see if this holds. It's pushing back up at the moment, retesting. So we've got a high, a low, a lower low. We've got another lower low. As long as we put in a lower high here, the bears are in control. So all we just want to make sure is it's not a flag. So we'll see what happens. But this looks like a good spot for aggressive. They all have looked like good spots for aggressive though. So we don't know, do we? But this thing is now parabolic 484 pips off of an 80 ADR. What is that, just out of interest? 6.1 ADR, straight up 2 weeks. Unbelievable. So this thing's due a rest. These guys, when this move starts, these guys are going to pile out of this so fast because they're going to be so worried about losing this money. Think of your P&L, right? If you've got a P&L sitting there with 5K in it, and all of a sudden you're watching it, it drops down to 4,900. Then it drops down to 4,700. Then all of a sudden it drops down to 4,300. And you were thinking, hang on a minute ago, I was on $5,000. I've just lost nearly 20% of my P&L. What do you think you do in that case? I'm closing it. When you close it, you become a seller. You add to the pressure. Then everybody sees their P&L dropping. They become sellers. They add to the pressure, which is why you climb up the stairs and fall down the elevator shaft. Look at Aussie CAD. Sell. Sell, 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 sell. Quick, quick, quick. We're going to lose it all. You got in here. You were there a minute ago. Now you've got half of the profit you had an hour ago. Oh, get out. What an idiot. Sell. Pressure. This is why A-shaped recoveries and V-shaped recoveries happen. So let's just cross our fingers, basically, and hope that that's what they're doing. Right, I'll leave it there. Anything you need, I'll be in the live room. No, I won't. I'm in the live room now. I'll be in the Telegram group. Back tomorrow at 7:50 for the New York session, as for the Frankfurt session, as usual. 2:20 tomorrow afternoon for New York. We'll obviously trade the opening ranges. We'll have a look at how everything's doing, what's going on with these Aussie pairs, see if we've made any progress on any of these, and obviously see what happens to this Canadian dollar. See whether or not we are going to continue these pushes at the moment. So ADR's going off all over the place at the moment. You're going to get loads and loads of RSI extensions on the hourly in a minute as well. So obviously just keep your exposure tight and obviously pick your trades. Have a good one. I will see you guys tomorrow.